In this video, we're going to talk about how to account for prepaid rent. So let's say you start your own company called Indoor Scuba Diving. You find an abandoned warehouse and you fill it with water so that people can scuba dive year-round. But then you need to pay rent for this building. You don't purchase it, you decide to rent it from a landlord, and you sign a 1-year lease agreement where you will rent out this warehouse for a total of $4,000 a month. But the landlord demands that you pay the entire amount of rent up front at the beginning of the year. So you have to pay $48,000 cash on day one for the entire year's worth of rent. And I just get that $48,000 by multiplying the $4,000 a month times 12 months, and that gives you $48,000. So you pay this cash up front, and the question is, how do we account for this? And what we're going to do is we're going to set up an asset account called prepaid rent. And the reason it's an asset is because this rent that we're paying in advance has future economic benefit. It's going to allow us to use this warehouse for our scuba diving company. Okay, so now what we're going to do is we're going to make a debit. Because prepaid rent is an asset, it's going to increase with a debit. We're going to debit prepaid rent for $48,000. And then we're going to credit cash. We're going to credit cash because we're paying cash up front. We're going to credit cash for $48,000. So the effect on total assets is nothing because we have one asset account increasing, one asset account decreasing, so there's no change in total assets. And so let's say all this takes place on January 1st of the year, but now we say, okay, at the end of the month, we've used up 1 month of our lease agreement. And so therefore we have to recognize that our prepaid rent asset is not as big as it was as of the beginning of the year because we've used up 1/12 of the asset. So what we're going to do is we're going to have to make an adjusting journal entry to reflect the fact that we've used up 1/12 of the asset. So what we do is we just multiply the 48,000, so we'll just take the 48,000 times 1/12, right? That 1/12 is the amount of the asset we've used up, and 48,000 times 1/12 is going to be $4,000. So we're going to credit prepaid rent for $4,000. That's going to decrease the prepaid rent on our balance sheet. So if we were to take a little snapshot as of January 31st, right after we made this adjusting journal entry here, if we were to look and say, hey, what's our prepaid rent account at on our balance sheet? Well, we can make a little T account to see what our balance is. So we started with 48,000, but then our adjusting journal entry on January 31st, we credit prepaid rent for 4,000. So it is $44,000 is the balance of prepaid rent as of January 31st after we've made our adjusting journal entry. Now, we've made a credit here to prepaid rent, but we have to have a debit so that our debits and credits balance. And so we debit rent expense. And why do we debit an expense account? Well, if you remember that basically what we're doing is we've used up some of our prepaid rent asset. And when we've used something up, we've used up an asset, we can think of that as we are creating an expense. And so this expense, this rent expense, is going to go on the income statement. And then the prepaid rent, because it's an asset, that would be on the balance sheet. Now, we're going to make the same adjusting journal entry at the end of each month to reflect rent expense and then decreasing our prepaid rent. And on December 31st, at the end of the year, we're ultimately going to get down to a prepaid rent value of 0, assuming that we don't have any other things going on with prepaid rent, and this is the only transaction that on December 31st is going to have a value of 0. And that makes sense because we have a year worth of lease agreement, right? And we started on January 1st. So on December 31st, our lease agreement has run out. So that means that we haven't prepaid any rent or anything at that point. So we have no future economic benefit. There's no asset left at that point. We've used it all up. So it makes sense that our prepaid rent asset would have a value of 0 once the lease agreement runs out.